This AMD trade is a good example of how being right about the overall direction doesn't necessarily mean the entry is right. AMD was clearly bearish. Price had broken down sharply, the moving averages were declining, and sellers had strong momentum. I entered short expecting that weakness to continue. Instead, AMD bounced almost immediately after my entry, and I eventually exited the trade for a loss. The important question is, was the short idea wrong, or was I simply too late entering the move? Let's look at the chart. This is AMD on the 3-minute chart. Before looking at my actual entry, look at what price had been doing leading into the trade. The structure was clearly bearish. Price had been gradually moving lower. We can see lower price structure developing, and AMD was having difficulty producing any sustained upside movement. More importantly, the moving average structure was bearish. Price was underneath the declining moving averages, and those averages were beginning to separate as the downside move accelerated. That supported a bearish bias. The breakdown. Then AMD accelerated lower. We can see several strong bearish candles as price broke underneath the nearby support area. This was not a small pullback. Sellers had clearly taken control. Price moved rapidly away from the moving averages and created substantial downside momentum. From a directional perspective, everything looked bearish. But this is where the trade becomes interesting, because there is a difference between identifying the correct direction and finding a good location to enter in that direction. The opening move. At the opening, AMD pushed sharply lower again. This extended an already significant bearish move. The bearish thesis was still intact, but price was now becoming increasingly separated from the moving averages above. That matters. The farther price moves away from the 20 EMA without a pullback, the greater the possibility that I'm entering after much of the immediate move has already occurred. And that is exactly the risk I faced here. My short entry. This first arrow marks my short entry. I entered expecting the bearish momentum to continue. There were legitimate reasons for having a bearish bias. Price was underneath the moving averages. The averages were declining, support had broken, momentum was strongly bearish, and the overall intraday structure was pointing down. So the problem wasn't necessarily my directional analysis. The bigger question was my entry location. By the time I entered, AMD had already traveled a considerable distance lower. Price was extended underneath the moving averages. I was effectively entering after a major downside expansion rather than near the beginning of it. That reduced my margin for error. What happened next? Almost immediately after my short entry, AMD bounced. This is exactly the risk of entering after an extended move. The bearish structure can remain completely intact while price still produces a substantial counter-trend bounce. The market doesn't have to reverse its entire trend for a late short entry to get into trouble. It only needs to retrace enough of the previous move. And that's what happened here. The first warning was the immediate lack of downside continuation. I had entered expecting sellers to continue pressing AMD lower. Instead, buyers responded. AMD pushed upward from the opening low and started retracing the initial decline. That should immediately make me evaluate the trade differently. The question is no longer, is AMD bearish? It clearly was. The better question becomes, is my particular short entry working? Those are two very different questions. Price pushes higher. The recovery then continued. AMD pushed higher toward this nearby level. At this point, the trade was showing me that sellers were no longer producing the immediate continuation I expected when I entered. This doesn't necessarily mean AMD suddenly became bullish. It means the timing of my short was vulnerable to a retracement, and that's an important distinction. Time and space. This trade also illustrates the time and space concept. Before my entry, AMD had already traveled through a substantial amount of downside space in a relatively short period of time. When I entered, I was asking price to immediately create even more downside space. Instead, the market needed time to rebalance after the sharp decline. And that rebalancing occurred through an upward retracement. So, although the bearish trend looked attractive, much of the immediate downside space had already been consumed before I entered. The exit. This second arrow marks my final exit. I closed the short for a loss. Again, I don't need to disclose my entry price, exit price, position size, or the amount lost. Those numbers aren't the lesson. The lesson is what happened between these two arrows. I entered after a substantial bearish expansion. Instead of getting immediate continuation, AMD bounced. That bounce moved against my position enough that I exited the trade. Trade outcome, losing trade. AMD moved against my short position after entry, and I exited the trade for a loss. Trade quality. The bearish directional analysis was technically supported, but the entry location was weak. There was plenty of evidence supporting a bearish bias. Price was below the moving averages were declining, support had broken, momentum was bearish, and the broader intraday structure was moving lower. But the entry occurred after AMD had already experienced a substantial downside expansion. That made the trade vulnerable to exactly what happened next, a counter-trend bounce. What I did well. My directional read was supported by the chart. I recognized the bearish structure. I respected the breakdown and the declining moving averages. I also exited when the trade moved against me rather than allowing a short-term trade to become something completely different. What I could have done better, the biggest improvement would have been patience. Instead of shorting after AMD had already extended sharply lower, I could have waited for price to pull back toward the declining moving averages or another meaningful resistance area. That would potentially have given me a better location for the same bearish idea. The distinction is important. I didn't necessarily need a different directional thesis. I needed a better entry location. A bearish chart isn't automatically a good short at every price. Key lesson. The trend can be right and the trade can still lose if I enter after the move has already become too extended. Disclaimer, this video is for educational purposes only and is not financial advice.